Okay, this morning was my official non-trading day because I was away from my computer. So what I very often do is when I'm away from my computer, just to get into the market again, I will lay down some ambush areas just so my planning stays intact, but I want to get a feel for the market again, and especially after Friday the market had run down quite a bit, which means it was going to act up and play around on the Monday, which it did. How it happened this morning, or what I was waiting for this morning, is as I saw just before the clock struck for opening time, the candle, the price was struggling to get through this, which was at that point in time an intermediate support. But everything else, including up to the daily, has now gone into a new general direction, which is a downward trend. Just bring the daily in quickly. I mean, the daily has gone below equalizer and it's starting to show color. This color is right. It said that it was going to go down to T2, T5. It actually went past there, and my plan was up until T2, T5. I adjusted my plan as I went along by saying if it breaks there, I'll run it down to there, which was more or less around the T2, T5 range, I think. Then I said, okay, at it reached that point, I need to find a new point where my plan needs to go in, and I found it with a lowest low at that point. Just trying to remember where that lowest low, oh yeah, the lowest low, there it is. I'll bring it in. That was when I saw on the 4 hour that the next target available for the price to run is going to be T3 or T4. It did. The 4 hour closed, and on the next one it shot down to T4. Didn't quite reach it, but I made a mark on it and I said that will be the next range that I'll be watching. On the hour it went through, what was that? That was the T9 and 10s, the 6 and 7s. It was them, but it pulled back beyond them, so it didn't close there. So the next ones that I'll be looking is for the price to go through them again and continue on its way to T10, T11. You'll have to excuse, my system is half a full system and half a beta system. I get so excited testing the stuff that I don't always load the latest, all the latest indicators. So I've got the T lines values in, but I don't have the actual T lines in themselves. I don't really at this point in time focus too much on them. What is interesting at this point in time is that what we look for in a trade is starting to happen, but it is not complete. You get out of your trade when you see your momentum line start pulling back, and you've got a choice. You can either climb out when it's pulled to the vein, or when it's crossed the vein into the vein predict, or when it closes beyond that. It's up to you. The market is in divergence at this point in time. The hours divergence hasn't been affected in terms of pulling it out of divergence. If I look at the 4 hour, I still see it in divergence. And it's still showing down. It's saying that it wants to go more, but we can't predict where it's going to go. We can only follow. So once it crosses that lowest low again, that will be the next plan of action for me. Then on the daily, we have gone past T2, T5. It might be that the market now pulls back for the rest of the day, so that the daily can close still below the equalizer, but maybe slightly above T2, T5, so it can take another stab at it tomorrow. It might want to go and close below T2, T5, so it's got that support to aim for or whatever comes in its way. Just move this back. The 15 has officially gone into a sideways right now, which is now a very strong indication that one must possibly looking at getting out if you're not out already, or if you are out, before you enter again, let's see what the market does. If you are trading on the hour and you're going for the long trades, it could very well be that you are still in, but don't pin your hopes. You should have actually gotten out with profit a while ago, and if this run then turns around and continues, just climb back in. Give that little bit of a spread back instead of pulling back your points that you've made already, if that makes any sense. So if you came all the way down to here, let's say you were a perfect trader and you came all the way down to here, 538 points, now you've given back about 420 points. That's not the way to trade. Round about there is possibly where you should have already said, no, sorry, I need to get out. I'm not going to give all those points back, and rather re-enter your position at a later stage. Yeah, let's close that. Then you'll find a lot of strength in T lines, never knowing how they're going to react. So while the price is running, if there's still something in front of the price, that's when I'll get in. But it's based on the fact that my points has been calculated ahead of time, having a look at T-line correlation, which ones are correlating to each other. Like I said this morning, my first trade was aimed at the T5 on the daily, which was roughly around the area of T6 on the hourly, and I said that's a very strong indication that it could go that way. Then I planned the next one and the next one and the next one.